Good morning. Good morning to you too, McGraw. Are you back? Or are you still on the vacation? All right, let's get some charts up here. All right, so yesterday made it. It's moved down, and Qs here. I'm starting with the Qs today since they're down the most. Down here about 32%, and down to where our destination that we talked about some time ago, which was this range here, just about there in 11,000. So down near some significant support, two pivot lows. Today's the quarterly options expiration. Get that out of the way, and guessing going into next week, I would think some kind of relief move, or some sideways chop. We'll see how it goes, of course. But down in an area where prices should stabilize, and we'll see next week if we get some type of a turn. Yesterday we talked about, one of the things we talked about was reading slowing momentum. How where the you got a strong move. This was a strong, pretty strong, obviously a strong move there, and coming down to this area, over here to the left, getting a green bar, we'd see the distance between the lows getting closer together, and the momentum slowing, and then at some point, whether next week or after, whatever unfolds, to see a pattern over here unfold. That could be a breakdown failure. It could be some kind of a retest pattern, some higher probability pattern, something like this maybe. Or maybe it does make a lower low, or an even low, whatever. We don't know how it's going to set up. The thing is that the lows are closer together, and maybe we get like a bottoming tail bar that breaks the lows and it reverses, and stabilization, and then we'll see how far the bounce goes from there. And we have the internals down here where they're in agreement with each other, and this is what we want, where they come together, where breadth and sentiment agree. So even if today has a little more downside, and even if it stabilizes. So yesterday, I was hoping that there would be a bit more bearish put buying, but there wasn't. If I have a chart of that here. So it was like 1.2, it closed there at 1.26. I was hoping it didn't get above 1.3, but I've mentioned here in the past that as an intraday piece of information, like looking at the NYSE tick that goes to an extreme, in bear markets, like an intraday extreme, you'll see a total put call ratio at about 1.5. So I have alerts set from that. I haven't had one go off in probably years. 1.3 went off, I guess a few weeks ago. Maybe that was over here. In any event, we've got things setting up here, location wise, internals wise, to expect at least stabilization, and then of course we'll see how much of a turn we get out of that. It doesn't mean that this bear market is over, but it's down enough to a point where some kind of stabilization and maybe a little bit of a more of a relief rally occurs. So we'll see. Trading aggression. The market is already very well hedged. That's why VIX can't get up much. Okay. Well, sure. I mean, one of the things I guess we saw hedging, I guess if you're looking at like the open interest in those put options, what did I see? I mean, it was, I guess, in that way hedged. Some of it came off. Was it? Well, down to 3,500. It's not that big, but spiders were, where's SPY? SPY. Yeah. So, 350, 340, 345. There's big open interest down there. So, and it held 360, you know, and so we'll see, 360, 3600 on SPX. That held yesterday. I thought maybe that's where it needed to get down to before we'd get a bounce, but it didn't get down there. So 366 and change. And so kind of about even, pretty much even from yesterday. No big deal. More bullishly, a gap to that high would have been a great way to start the day, or a larger gap down. We still got 20 minutes. So maybe this keeps going down here. You can see the 5 minute starting to move lower here. It was rolled. So McGraw's got good information here. SPX September was rolled to 35 to next week. Okay. So, markets are going down, and institutions hedging or buying out of the money bearish bets in case things get out of the hand on the downside and we get some kind of a mini crash, that they're hedged in that way. But looking at where the markets are at and how much they've moved down here, internals, maybe it's just not going to get down there, and those bearish bets and what we want to see. I mean, it's the whole idea behind getting sentiment down here to a historical extreme where institutions and traders are, whether hedging or just bearish bets, that the market is going to go down sharply. And historically, it doesn't when it gets to an extreme. So we'll see. I mean, ultimately, now that it's here, I mean, you get a bounce. The bear market may not be over until S&Ps get down here. I mean, we'll see. It's in a downtrend. It's got room to keep falling, but the expectation to have it fall down here now is unlikely because of the internals. And I showed you where the Qs were at that level. So we'll see how it unfolds today. And S&Ps obviously dropping down into their support area, and down from that low now. That day it was down about 9%. So intraday as of yesterday, close to 10%, and this was 10%. This move down was close to 10% from here down to this stabilization. So pretty much, those kind of equal moves on the down, and the internals, and looking to the left, and all of this information that we look at to assess the probability of at least stabilization and then a turn. So I say stabilization because we have to see, the power of the turn and how it happens. I mean, it could chop sideways and drop again, but the downside at this point should, just based on what I said, should be limited. So maybe we get a retest of this low as this is moving down here today, and then buyers will step up again, and so on. I mean, that's what we do. We look at these patterns and, internal gauges and intermarket analysis and so on. And then on the daily chart, we've got this wide range bar. We see if we get a big bottoming tail bar or some kind of big green bar, some range expansion bar, or this, we don't know how it's going to happen, but the concept of bar by bar analysis is something I come up with years ago because look, we get tied up into thinking, oh, this is the way it's going to be. And then it doesn't, and get, oh, what the hell happened? We're confused. Well, we just didn't know how to look at it. And I mean, ultimately that's where things evolved with myself, was that, just looking at things in a certain way. It's like, hey, it doesn't have to happen your way. Right? All right. So SPX for today, Jacob's telling me 35.45. I believe that should be a no-brainer. Right? So getting below 3,600, first of all, yes. And it's on the support and the support level and so on. So it's everything. I'm not going to repeat it. All of this makes sense that, but 3,600 even if it pokes below it for a second, odds are it comes back up again. And that's, from SPX here, wherever it's going to open up, give or take yesterday's close, it's, got to go down a decent amount to get there anyway. And so one of the concepts we look at is, like I spoke yesterday, looking at what could the possible downside be. Yesterday when we were talking about, prior days and what yesterday could have happened. And I looked at the size of the bars and the gap down and saying, okay, this is a big range bar, and let's extend it lower and say, okay, this is, the odds of where things could go just based on a wide range bar, what could happen today. So that's one of the ways of assessing what the downside possibilities are. Yesterday, if you go and look at the video, I drew the bar and then extended it down, and that gave us a safe area to say down, below, if to get there would be extreme. So a credit spread below that should be a high probability credit spread, and it worked out fine. All right, so let me just reset this what I have here. Sort that SPX. Give me a second here. $35.50. Well, I was just looking at to see what premiums there are there. I would say yes. Just I'm looking at what the premiums are. Someone emailed me last night, and I think they thought they were doing a 0 DTE, but I think they put on a credit spread at the end of the day, right near 4 o'clock, and they did it expiring today. And I remember right the email, I think they said that they at that end of the day yesterday there was premium at $34.50, something like that. At least they got far enough away. It seemed like they weren't sure about what they were doing, but at least got far enough away to be safe. So these, I hate the way TC 2000 does this here, but $35.50 expiring today. Wow, that's some big premium. If you want to go there, obviously lower. So yeah. All right, let me continue. Q, same pattern. We looked at this 11,000. If it does drop, I would say that's the if it drops down to that whole number, that would probably be a good area to look for things to bounce back up. Similar pattern there. I mean, when I see this pattern in this wide range bar, a lot of times it's followed by an inside bar. So, we'll see. Anyway, the takeaway going into today, this morning, is that the downside at this point, I think, is going to be limited. And Russell, big wide range bar, inside bar, 16,000 is what we talked about, and the same, similar level over there to the left in these markets being where everything should, take a stand. Bitcoin, just chopping around here. That held up relatively well yesterday, but so, as far as the stabilization idea, bias, keep an eye on this Bitcoin, because, if this thing starts to crack under 20,000 and there's nothing down below here, that could really be something that throws a monkey wrench in things. I imagine that must be a pretty big level. Well, one of the things that we mentioned in the green room yesterday was this guy, the CEO for MicroStrategy, and giving his assessment of how whatever he looked at a 4-week moving average of whatever. And what did he say? Like 20,100 or 20,400 or 21,400 was a good buy area for whatever reason. But so here's a guy with a tremendous position in Bitcoin, and giving his belief to the world on CNBC as to where he thinks it was a good place to add. And we're already with his position. Yeah, 4-year MA. You got it, McGraw. Thank you. And so, look, if this starts breaking below that MicroStrategy, keep an eye on that. I mean, this starts breaking below, I think, all hell could break loose. So we always have to have two scenarios. And why could something happen? Well, because having a second scenario, but what could trigger it? Well, this is something that could trigger it. So set an alert. You don't have to watch it. Set an alert. Keep an eye on it. Crude oil. This could be a good thing as far as the markets, the stabilization and or a rally. If this little buy setup here and this red bar happening was to turn into a measured move to the downside. In addition, look, yesterday, I was saying in the room, it's like, this market keeps grinding lower, yet, well, crude oil had this big bounce, so that wasn't a positive, but the 10-year, right, was moving down, and now it's lower. And we had the dollar, was coming down, and like those things which should give the market relief were not giving the market relief yesterday. So, overall, you had the AD line yesterday just pegged. No, that's not what I wanted. Anyway, you can look yourself, was just pegged at around minus 25, 2,600 throughout the day. So the selling was constant throughout the day. We have internals at an extreme. The 10-year was coming down, the dollar was coming down, and the selling just continued. And all of that selling didn't produce a big wide range bar, like a tremendous amount more downside. So again, just kind of like, here's all this selling. It's not dropping rapidly. So someone with all that selling was buying. And well, we'll see how it all unfolds. So we look at all this stuff to come to what should be an educated assessment and bias. And we'll keep an eye on oil, silver coming up off of the low here and beginning to form a bottoming tail bar there. So, maybe with the dollar coming down, one of the things we've talked about, the dollar being up, not good for gold and silver. But now if the dollar continues to pull back, this might be a point in time where, they can get a relief rally from them. So, and, the euro talked about, it's down here near this long-term support. So a lot of things lining up to at least coming into maybe, this summer rally idea, and transports, pounded down and all that. So to you, Dan, let's see how it unfolds.
Good morning, everyone. Hey, Debbie, I didn't see you here this morning, so I emailed you a copy of the internals that Greg just went over. And that's why I said yesterday that we're looking for a short-term bounce turn. But the problem is this is a shitty pattern on the daily. It's in a power downtrend, gapping under the green bar. So yeah, the internals are cooked, which is a very good sign, but we need signs of a more potent turn. I said 15-minute chart is not good enough to stop a power move down daily, weekly, monthly, but it could be for the day. That's why I had posted put spreads on 0 DTE. I obviously liked it better when the spiders were gapping up over this prior pivot. So I'm going to keep an eye on both of these to say hold off, because I said do 10-minute high just arbitrarily. I mean, picture it if it gapped up here and then just chopped around for 10 minutes and then took out the high, then I like it for 0 DTE. But now we have a deep retracement, and so I don't know. I'm more iffy now. I posted spiders, Qs, same. The daily chart is horrendous. These are just zero DTEs. Roku did some news with Walmart. I like the inside bar from Wednesday's WRB gapping over yesterday's high. So this 10-minute high is a zero DTE I like. And then remember our two favorites yesterday for swings, Walmart and CME. I posted both of those. Those are good to go if they trigger. Procter and Gamble is a Climo. I have an hourly chart on my other chart, but look at this beautiful inverse head and shoulders on the hourly. Beautiful. This is a beautiful day trade pattern. So you had this collapse. That is your left shoulder. And this head is a retest actually with a gap. That's my head, 100% retracement, bullish consolidation, price void. So I have an alarm set at 134.50 as a day trade, and then we'll see if the market's in a good mood or not to see if we want to nibble for a swing. John, are you talking to me? Yes, I do have a fat head. All right, we have very light open position. Actually, we're flat in the weekly options trader. Microsoft, we have a 240 put that expires today. And we should, I'll look at the quote at the market open here, but we sold it for like a $1.40 or something like that. So of course we're gonna have a gain. It closed at $1. And now we have overnight theta and gapping up. So yeah, I'll move stop break even on that. Beyond Meat, if it can take out Wednesday's high, then I like it as a bottoming pattern. So I would love just another neutral little inside bar today, and then I'll put that in the weekend letter. AMC, just a little bottoming pattern. Over yesterday's high, could be a put spread for next week. I'll keep it on the list. Maybe Bitcoin drops 20K. Well, we want it to go way under 20. We like shocks and washouts. So it's 25.70 right now. So just going to 20, I don't think it's that magical. We need panic. I want to see it open up at 15,000, John, on Tuesday. Well, it trades all the time, but you know what I mean. Well, we had a Black Monday last Monday, remember? All right, Futu. Remember I was watching this gap breakout from this 1, 2, 3 bullish weekly. It's a gap in here to these prior highs. This could turn out to be a 30-minute high. I just saw Reiner there going by the ticker. That's not a great pattern, but I mean, look at jets, cruise ships. They're going to bounce someday, so I'll keep an eye on them. Amazon, there was an article in today's journal saying that they're going to kind of put the brakes on their crazy growth plans. Revlon, Kaplunk on news of filing bankruptcy. Now it's up on news that there's a suitor interested in them. Snap. I just heard Joe Kernan saying something or other that they're doing, but no interest. Banks are oversold, no pattern on that. AXP, the problem is I would like these better if they were fluid bars down. But we got this jiggle here and a gap under, so that's damaged. But day trade's a different story. So they were gapping up over yesterday's high and buy setup on support. But these are only day trades. This is obviously the FOMC, you know, craziness, and that's going to be resistance. Twitter, Musk came out. I'm sure he pissed off a lot of employees. I'm paraphrasing, but that's how Musk is. He said, if you all don't get me 1 billion subscribers, you know what's going to happen. It's like, man, he's a tough cookie to work for. Google on 7:15. Well, I did like that news a lot, Debbie, on Amazon. David and I and John were watching it. I think on both of these 2 days off the bottom. And I remember giving the go ahead on a long call, even though I didn't post it, just because it, you know, it had all this sideways resistance. But yeah, this was a pre-split kind of run, and you know, also whatever the broader markets were doing. So Twitter, I have no interest. JD is a bullish gap. Oh, I got Mr. on the other computer, so I'll put JD there. Adobe had earnings. There's really no earnings to speak of today. So this is one gapping down, what, $15 now. This one, there's no pattern, but it's a Wall Street loved. Let's see what happens. It could turn into a 0 DTE. Go. I missed this yesterday, but yes, yesterday was your entry. Still has room on the weekly. Well, 42 would be my target. So MTZ, Greg found a couple of these Climos yesterday, and that's giving no. WMB, I'll go ahead and set some alarms on these. WMB, I'm going to set an alarm at 3050. EPD, I'll set an alarm at 2420. Qs, you know, look fine on the 15-minute chart with the gap. This was Emmanuel's trade, RLX. That's still strong. I'll keep an eye on it. The weekly is breaking out. All right, Microsoft, the 240s are 40 cents. So we're not going to turn that into a loser. Let's just move stuff. Yesterday's low. Well, actually, today's low now. It's ripping 244.28. And JR is asking about EDU. I've been watching EDU for a couple of weeks now. I did see it up again this morning, actually. Let me give me a second. I'm updating Microsoft. EDU, it's a climactic sell setup. So it looks like a short under yesterday's low. For a long, you way missed your entry. The weekly has room, but that's going to do it from Climos. That's going to take a long time to set up, in my opinion. Boeing here going sideways. I love the weekly on Boeing. It's a beautiful double bottom new low plus. Always look at Jets with Boeing, and that's still a dog. I see RCL at the